Now, when we look at commercial property, there's really three major sectors: industrial warehousing, retail, and office spaces. Now, as people don't want to invest in office spaces, they may now choose to invest in retail shopfronts. So $1 million, what can you expect? In the city, $1 million will probably buy you somewhere between 70 to 120 square meters of retail space, depending on the location. So a little bit further out of the city, you might get a little bit more, you might get towards that 150, closer to the city, and the more that it is closer to the density of population, the smaller it's going to be, even though you're paying for the same $1 million, because a lot of that is dependent on the rent. Now, if you're further out of the city, then your rents are going to be cheaper, so you get more space for your $1 million. Closer to the city, the rents are higher, so you get a smaller space for the $1 million. However, your tenants are dependent on foot traffic in terms of a retail shopfront. So that retail shopfront needs to have really, really good traffic, and it needs to be not being inhibited by parking issues, logistic issues, or other tenants who block the view from people walking past and seeing the actual property. Now, of course, you would have destination tenants like a medical center, a legal office, wealth managers, or somewhere like a Centrelink where people are going to go no matter how hard the parking is or how hard it is to get there, right? But ultimately, retail shopfronts are dependent on these things such as traffic, location, and other tenants, so the tenant hub. Their returns right now in this current market in metro areas, it's somewhere around that 5 to 6% yield. Now, in commercial, it is a net yield. So when I talk about yield, it's different from residential. It's a net yield. It means that it's after outgoings. So all outgoings, that's land tax, management fees, insurance, strata, body corporate, all of that out, it's net 5 to 6%. Now, why do I say 5%? And you might go, oh, it's really low at 5%. Well, if you want to buy in Sydney and you want to buy in a good location where there's density, it is going to be around that 5% mark, especially when you have maybe an allied health or a medical tenant, it will be around that 5% mark. Now, if you are looking at buying somewhere like a Melbourne or Brisbane or maybe even a little bit further out, then you're expecting it to be about a 6% yield. So on $1 million purchase, you get $60,000 net in your pocket. That's after expenses before you pay your mortgage. Now, if your mortgage, if you're borrowing 65 or 70%, maybe somewhere between 40 to 45,000, you're still clearing about $15,000 in positive cash flow from that property in retail.